All right, guys, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is the 5th of September today, which is Wednesday. So let me go through today's price action. A lot of things to go over today, so I'll try to talk quickly. We had a little bit of volatility today. If you look at the S&P chart, you probably think, not that bad, down 30. Actually, now it's just adjusted down 33 basis points. Not that bad. However, I think some of the volatility really being masked a bit by the performance within sectors. So what do I mean by that? Well, if you look at some of the sectors, so let's go through the positive first. And we'll do this. Usually I like to go through the negative first, but I think today's a lot more negative, just in regards to performance. And then I'll give you my overall view for the market and a little bit about today's option activity. So best performers, pretty much all the safety areas and a couple other areas which I thought were interesting. So XLU, that's the utilities ETF, that was up 1.4%. Consumer staples also up more than 1%. So it kind of seemed like there was, I don't know if you want to call it a rotation, but it was a safety, a little bit of a safety trade. And really that's the case because when you look at bonds were down today. And yields went a little bit higher. So usually when yields go higher, people, kind of gravitate a little bit more towards the banks and get out of those safety areas because once yields go higher, that means that you could go to bonds rather than going into things like utilities. But with utilities up 1.4% today, people were really going into some safety areas. So when you balance that, because of course you have utilities and consumer staples that are in the S&P, and then if you look at, and you can see this pretty nice candle in XLU, right? So no breakdown there, and it looks like could be getting up higher here to possibly 53 and 55 and change to that purple line, but. So those were some positive things. A couple other things that caught my eye were the home builders that did pretty well today. This is ITB, which is a very sideways looking chart. Again, more home builders in this ETF than XHB. I know the names will kind of be a little bit confusing, but same thing, a little bit the sideways here. Home Depot was a big name yesterday, kind of ran out of steam today. I think a lot of that was possible hurricane. People go to Home Depot, they buy a lot of things like what not drywall, but what do you call it? Plywood, right? When they go for Home Depot for hurricane season. So being that there's not going to be such a big hurricane in the Gulf, which is a good thing, right? Home Depot kind of stalled out a little bit, but I think still one to watch because it's on the cusp of breaking out. You could see I've got a trend line drawn there. Other than that, industrials were very strong today. So again, maybe going into another area, which again is a good thing to see a little bit of money going into industrials. But you would think if I showed you the industrials up 3/4, you'd be like, oh, the market probably had a pretty good day. Well, then let's switch over to what happened in technology today. We'll start with the Qs. So it's really kind of interesting how this happens. And again, if you were to just look at the S&P, you'd probably think, not that bad of a day. But Qs were down 1.3%. Look at some areas like this is the Internet ETF, absolutely squashed, down 2.7%. Also, the software plays, which have been really, really strong lately, that got squashed as well, down 2.7%. Chinese internet names, I'm sure you kind of know what happened here, but down 4%. So, I see a lot of people talking about this, and I'm a little bit surprised because, and I'm not trying to criticize anybody by doing this, but you do have to pay a little bit of attention to what's going on in the local markets, right? I mean, if everything goes down overnight in China, I mean, you could see some of these markets. I mean, this is something that we go over every morning in the trading room. But you have the Hang Seng down 2.6%. So what do you think the Chinese internets are going to do when you see this kind of a breakdown that we're seeing in emerging markets? Do you think Alibaba can go up here? I mean, I'm a little bit surprised that people think that. So again, I'm not trying to call anybody out or anything like that, but as this continues to break down, it's kind of like I'm trying to give I've been trying to give a nice analogy to this, right? And we can look at the Shanghai as well, which is a different market. But I mean, this looks horrible. And this doesn't even have the currency effect in it too, but which, when you layer that, and by the way, if you look at EWH, which is the Hong Kong ETF, look at the volume that happened today in this. So traded 17 million shares, normally only trades 4 million. A lot of selling. If we look at some of these prints, you can see that some of these were swept when we look at big block trades. Right? So 1 million shares, 5 million shares. These both look like they were sold. And then even more shares, 1.9. So some big block orders that went up. So that one are up around 12 o'clock. And you could see, I think right here is that print, right? So somebody, when you trade that many shares, you ask for a little bit of room from, for block trading. When you're printing a customer, you need to sometimes print it a little bit away from the confines of the market so that you could hedge, a 5 million share order. So you could see that print going down all the way here at 23.48. So that's a sell when that happens. Means the market maker needs more room, or the block trader. So yeah, so that's just one thing that happened today. And I guess you could kind of say, like, take a look at it this way, right? In terms of between Alibaba and some of the other Chinese internet names, if I were to tell you that the S&P was down 25% year to date, do you think, pick any name in the S&P, let's say IBM or Apple. Again, I'm not saying, I'm just making this up hypothetically, but if somebody told you that the S&P was down 25%, would you think Apple was up or down for the year? Most likely it's down, right? It's not going to be up when the overall market is down. Maybe there's some outperformance there, but for the most part, if a whole index is down 25% or whatever, there's not going to be a name that you like that is a single name that's going to be unscathed, right? So if you look at, so if we go to SPY, for example, sorry, I'm really beating this. But if, when this happens, right, when the S&P did this, is the average stock down or up? It's going to be down. It's because the whole move, the whole move is taking place. So that's kind of what's happening with the Chinese internet names. And, the question is, and this was being sent around all over the place today, is contagion, right? What's going to happen in terms of the rest of the world? My analogy is, right, I think the U.S. is the best block. Sorry, I messed up the saying already. I think the U.S. is the best house on the block, but you have to be a little bit worried if all the other houses are burning. And, look at it. Euro stocks are down 1.5%, and this has been going on now for months. It just really hasn't, the U.S. has really been outperforming. And it's really tough to kind of stick with that view that things are a little bit troubling when the S&P is breaking out to new highs, right? We could look at EM versus SPY, or you could look at, but this is getting nasty. This just broke to a new low, emerging markets versus S&P. So, this is a 5-year chart, and this is what emerging markets are doing versus the rest. So either one or two things happen. Or I guess maybe a couple things happen. The rest of the world can continue to go down. I just don't think that is a very likely scenario for the rest of the world to keep going down and the U.S. going up to 52-week highs. I think either the rest of the world's equities have to start to participate, or the U.S. market, I just don't think we can continue to have this type of outperformance. Do I want it? And am I trying to be optimistic here? Yes. I think there's still plenty of positive things going on. So if we take a step back from this ugliness, right? For now, I think, the month is playing out as it normally does in September. September is, and again, this is something I've been saying till I turn blue in the face. I said this all last week in the trading room, but it's tough to kind of continue to see some momentum plays continue to go up, like these pot stocks, like a couple of the semi stocks, like AMD, like a few of the other stocks, that have just been continuing to ramp and do very well. But September is the weakest, historically is the weakest month of the year. This is what I sent out to on Friday. This is what I sent out to members, because I've been preaching this. So you can see I practice what I preach. This is what I've been preaching all last week was, hey, take off some money into the rally. And I did get pretty lean. I stuck on a couple positions. We could talk a little bit about Netflix. Netflix I went long. I chose to put on an October option, and I'm getting beaten up pretty decently in this one. Down 6% today. And it kind of hindsight 2020 glasses on. It hung in there on the 50-day moving average, so you couldn't really tell what it was going to do here. But sometimes these names that they congest or they have a little bit of a flag, they don't always resolve themselves to the upside. They can resolve themselves to the downside, and it's pretty ugly when it happens. A few other names that I'm watching. I think Google is interesting here. It did put in, it did take out this VPOC today, this purple line, right, which was a version point of control from last month. So we'll watch the hammer bar here. They were a no-show at this congressional meeting, which I cannot believe that so Jack Dorsey testified today, and Google didn't even show up. They apparently brought somebody in who was not senior enough, and Congress just told him to go home. Which I think was yesterday when the list of people who were supposed to go. But that's not impressive to go. You're supposed to be giving a chance to defend yourself, and they don't even show up. So I was shocked by that. But anyway, just regards to the price of the stock. We'll see what it does, and we'll see if that hammer shows true to form. You get a couple ugly things going on here. Another name, just to kind of show this how it's widespread with momentum, take a look at Visa, for example. This has happened. I've noticed this before when there's a little bit of market volatility. Visa really can get smacked down pretty decently, and it always recovers. I'll say 99% of the time. So keep an eye on this name the next couple days. The other thing is what I try to do on days like this, names that I really like and are in a big uptrend, like Visa, is I kind of wait a couple days. I know that we've been so conditioned, and this is where it gets really hard for us, I think, on a day-to-day as traders, is every little dip gets bought. Or sometimes even hourly dips, they get bought. But, the market needs to adjust itself every now and then. And I hope, as we always see these dips, and it's always, the dips are difficult to buy. Nobody ever wants to buy, and everybody goes quiet on Twitter when there's a little bit of volatility, right? When everybody's winning and everything's going up and it's easy, and I think that's the other problem last week is everybody on Twitter was getting so confident, like the market would never go down again. So this right now is normal. We're not even into the 50-day moving average. I think this could go a little bit lower in Visa. So that's the other thing to keep in the back of your mind. It's normal for the market to go up and to go down, right? It can't just go up in a straight line. So for now, the one thing I don't like, which I was showing, and I got that out of the way early, was international markets. I'm really worried about that. That's on top of my list in terms of worries is what's going on. When you look at, I don't even really look at S&P futures at night. I look to see what the Asia markets are doing. It's important. So that is has me concerned right now. The fact that also these trade tensions aren't going away right as soon as I think people thought that they were. I think people, myself included, was a little bit optimistic that some of this stuff was more for show, but so far it's not going away yet, and that needs to happen. So for this market to continue to go higher, in my opinion, we get into more trade wars and a permanent trade war. It's not going to be good. People make things all around the world, not just in the U.S. So anyway, that's and I hope it gets resolved quicker. So I think keep an eye on names like Visa that usually straighten themselves out around that 50-day moving average. I think we may have to come in a little bit further. If you're doing a little bit of dip buying like I was today, I day traded IWM, which worked very well. You could see a nice hammer there, so that's pretty good too. Only down 27 basis points. So it does kind of look, if you kind of go around and look at some of these sectors, I think that Walmart looks pretty interesting here. I added a small trade in Walmart. I think Dow DuPont looks pretty good. So it is healthy to see a little bit of sector rotation, even though this does not close on the highs, which is where I added my trade. I think versus support of 69.37, I think is a good looking trade. You know, a word about option activity. Again, I'm kind of droning on a little bit about stuff today, but you know, what I use out for option activity is not a holy grail. We could comb through and look at some of the activity in the last 3 or 4 days. I would say about 95% of it didn't work. So, you know, there's a couple trades in here, like Stitch Fix, that we went over yesterday. There's a couple trades in here that worked pretty well, but you're really looking at the outliers. So don't let people on Twitter try to tell you who tweet you know, 50 symbols out and then retweet the 3 that worked over and over and over. That's garbage, right? And I hope that everybody knows that. But there were some interesting trades that went up today. So again, I would not say that this is something where you put your whole like leap of faith because there was a call buyer. But Salesforce, there was a nice chunky call buyer out in February. This looked pretty interesting to me. DVA actually saw one. This was a name that moved down. CME is another name that moved down pretty decently. That you know, saw some calls right at the, you know, not right at the end of the day, but close to the end of the day. Another name to keep an eye on. It almost broke out, and it was down, you know, over 3% today. So small but aggressive call buyer in that one. NVRO, a couple other ones. There was a little bit of Twitter dip buying today. And that's it. We'll leave it there. The video is 16 minutes long, so I like to keep it. I don't like to keep it much longer than 15 minutes. So a lot to go over. Bottom line is, you know, these moves, sometimes when things really get ahead of themselves, like the internet stocks have, like the software stocks, they're going to come in and correct. They've done this before, you know, when valuation gets a little bit high. So I think it's perfectly normal. We haven't broken any support. Remember that this happened a couple times here. I mean, this is a big move, right? 182 down to 166, and rebounded quite nicely. Also here, so these moves can come pretty fast and in your face. 192 down to 180, and then a recovery to new highs. This was 2 big days, 2 big red days, and a recovery all the way up to new highs. So if you put it in that perspective, these corrections with these software names, they happen, right? You just have to be prepared and you know, kind of wait through it, and then they usually provide good buying opportunities. So if you did what we did last week, you should be in pretty good shape in terms of getting out of some things and building a little bit of an extra cash balance. So I will look to probably redeploy some cash tomorrow. I think for tomorrow, I'll give you just my quick aspect. I hope we've opened down and not up like 20 basis points. I think if we start the day up 20 basis points, it might be a difficult day. If we start down 1% and kind of get it through our system, generally what people do is when they see the market is down 1%, they think it's on sale, they buy. If we start the day up by 20 basis points, those people who may have been trapped a little bit may continue to sell. All right, guys, have a great night. See you tomorrow.